Hey guys, what's going on? Welcome to another episode of a daily market review using ICT trading concepts. So I'm just going to jump right in. In the UK, we have a public holiday, so there's not much trading going on over here, which may or may not have had an impact on the US markets. Seen a bit of sloppy action on the S&P, which I'll get into shortly. Um, so yeah, well, I'll review that in a sec. But if we just jump into the dollar index first, the DXY chart, we kind of closed on Friday at this level, pretty much below the buy side liquidity. So there was essentially a double top created here. And I ended Friday's review with a prediction that we will probably look to sweep this buy side liquidity sometime this week. And that pretty much happened overnight. So from a short term perspective, that target has been hit. So not much not much of a bias at this moment in time, bullish or bearish. We've hit our target, so it's just a case of waiting to see which direction we start to move into, which would help us with determining a bias in the likes of the indexes and the major foreign currency pairs and crypto, if you're into that. Um, but my personal feeling is we will probably break these highs and go higher on the DXY. So if we switch over to the S&P, saw quite a large move down last week on the Friday, and we've opened up with a bit of a trading gap as well this morning. Uh, just a quick review on the daily. We've got some areas to the downside that may be of interest. So we've got this day fair value gap on the daily. We've got this sell side liquidity here, and we've got sell side liquidity down at these levels. So if the dollar index does, rally, then these areas would be points of interest to trade towards. Um, so yeah, in terms of today's daily action, if we just switch to a lower time frame, so the 15-minute, I did actually take a trade. I took a short, just because I am demo trading. I just wanted to jump in. Um, got twitchy fingers. I probably should have, not traded, especially with it being a public holiday in the UK. But I felt that I had a potential setup, and I did want to enter the market with a trade. So what we saw here, so with this action, we can see all this down action. Got the trading gap that I mentioned, which can act as a bit of a liquidity void. So we'll probably see a lot of action in this area this week, which in hindsight, I should have avoided entering a trade in this area because it can be a little bit volatile. So, just a quick review on what I saw this morning. So, during the New York AM kill zone, I was looking for a setup to form. And one thing that piqued my interest was that we had this buy side liquidity here on this swing high, and we had a number of relative equal lows formed at this level. And we've got one, two, three, four candle lows on the 15-minute chart. So my idea was that we would look to sweep this liquidity, and then I was looking for a market structure shift to the downside with displacement, with a fair value gap created. And if price retraced into that fair value gap, then I was looking to target a run on these lows. It looked good at the time. I was sharing a couple of trade ideas around this setup on my Twitter account. But as you can see here, so on the 9:30 equities opening, we saw a run above this high, and again um, during this time period, and then we saw an energetic move to the downside. So this displacement, where this fair value gap was created, and we had a market structure shift on the 15-minute time frame. My entry would have been void if this had swept these lows on this candle, but that was not the case. It actually, swept these lows here. So I was still thinking, yeah, we've got this fair value gap. We'll retrace into it. So my entry was, so I actually got my equilibrium at this point. So I wanted to see price enter a discounted area as part of this range. And if I just open the position just to show my entry, so I entered at that equilibrium. I had my short at this high, and my target was, a run on these lows. So that's the idea I had, but that's not what happened. Well, I was in profit for a short period. We had this energetic candle down. So at this moment in time, I actually adjusted my stop loss, and I reduced it to this 5-minute swing high, and which helped minimize my losses on my demo trading account, and then eventually got stopped out at the lunch hour, pretty much. So upon reflection, so I mean ICT, I've seen him. Although the entry of the trade wasn't during the New York AM kill zone, the setup was actually created during the New York AM kill zone session, which is why I still entered. But in hindsight, with it being a UK public holiday, with having this kind of trading window gap there, and it also being so close to lunch, if I'd have, what I should have done is taken a note of those points and then reflect on them before I set up my limit order. And that's not something that I did. I didn't do that. But I have made a note now, as part of my Friday's market review last week, had a small section on kind of dealing with emotions and how I've started a trade journal where I'll be noting my emotions and, you know, um, uh, kind of big points that decide whether I enter a trade or not. So this is something I've added, and I'll hope to avoid this next time. So this was my review on the S&P. I still do think there's a lot of sell side liquidity at this level, so still think we will eventually get a run on that, and then see where we go. But it's quite a large drop here. We're in quite a premium zone in terms of this range. So there is potential for a retracement depending on what the dollar index does as well. And next, let's move on to Euro USD. So with it being a public holiday in the UK, I was spending some time with the family, so didn't quite get to catch this potential, well, multiple setups actually. So with the Euro USD, in hindsight, during this markup that I've done, from my perspective, this was a really nice bread and butter ICT fair value gap setup, which upon review is really, really nice. So I'm kind of gutted that I missed out. I was busy for most of the first half of the day, UK time. So I kind of missed this trading session. Um, so in terms of a breakdown, so if we look at the daily, we've kind of hit this area where we took this sell side liquidity and we're just hanging around in this area. So there's not much going on. So from that perspective, I'd be a little bit hesitant um, entering a trade until we have a good movement in either direction, which sets a bias. And in parallel with the dollar index moving as well, so we can have a further bias to the direction. But in terms of the lower time frame action, something really nice occurred. So what I identified, so this is on the 15-minute time frame. And what you can see here, so on this move down here, this swing low had been created last night. And then in the early morning trading session, we had that sell side liquidity taken out by this move here. And then we had a nice energetic movement to the upside, resulting in a market structure shift of this level here. So with this move, this swing up. And so with the Forexes, we have two trading sessions here. We've got the London AM kill zone, which is New York time, 2 a.m. to 5 a.m. And then the New York AM kill zone, which is 7 a.m. to 10 a.m. So you'd be looking at trade setups in those windows. Personally, I am sticking to just mainly sticking to the New York AM kill zone because that works nicely with my personal routine that I've got going on. Whereas with the London AM kill zone, I won't actively look to trade in there, but I'll still, in hindsight, do a markup. And, if I'm there at my laptop during these hours, then we'll see if I see any nice looking setup. But primarily, I am aiming to be active during the New York AM kill zone. So in terms of the setup that we saw on the London AM kill zone, so with this displacement, what are we looking for? We're looking for any fair value gaps that are created. So in terms of this move up, we saw this fair value gap created here. In terms of an entry, would we want to enter at this price, refilling that fair value gap? Probably not at that stage. And the reason for that is, if you're looking for where the price as part of this range retraces back into a discounted area, it didn't quite reach that. So as part of a range, if we see, we want, as part of a move up, as part of a displacement, we do want to see price reach a discounted area. So that's anything below the 50%, below the equilibrium of a move. Just because you don't want to be entering, in this example, a long in a premium area because price may decide to reach back down into a discounted area. So if you've entered a long in a premium area, then the chances of you getting stopped out are probably higher. So that may or may not, that probably that doesn't come into my criteria. But later on, we saw a move back down with this swing low again, and it kind of hit the fair value gap. To me, it's not very clean in terms of respecting that fair value gap. So depending on how risky you'd have wanted to be, you could have still set up a long here, but have your stop at this range low here. So if that's what you had done and you entered at the equilibrium area as part of this fair value gap with your stop set to this low here, then you've got a nice potential of getting a nice return as part of the trade. So if you wanted to, you could have took some profits, at this high here, just because the range in terms of the daily action is not great at the moment. So you could have had a nice tight target here, which would have still netted you 1.53 to 1, or taking partials there and letting the trade run to a higher level as part of the New York AM session. So I'm just going to set that there and then have a look at this setup during the New York AM kill zone. So between 7 a.m. and 10 a.m. I saw this nice setup as well. So we had this run up as part of this move up. We had a swing low created here, and then as part of this retracement back, we can see that price retraced back into this discounted area. We also had a fair value gap available here. So, you got a criteria for a potential long as well there, with an entry at the equilibrium point of that range as part of the fair value gap. And this setup here would have triggered you in there, and your stop loss just under that swing low there. And then again, you've got a nice run there. In terms of your target, so you could be aiming for these levels here. So you could either aim for these highs here, so sweeping that, and we see, in hindsight it's quite obvious because we can see that this is where the price went, but at that moment in time you could have targeted this point here, or if you just want to look at the actual move down that we're retracing into. So what we could do here is get a measure of the fib high, of the range high to the low, and we can see the equilibrium of this range. So from these lows, we're retracing into a discounted area here. So depending on how you look at it, you could still have the option of taking profits at the equilibrium, or these range highs. You've also got this fair value gap here. So there's quite a few areas to target, and we can see how nicely it's respected that level there. So you could have targeted that area as well. So that's a really nice, in my eyes, a nice bread and butter trade. I'd have loved to have got in on that, but unfortunately it was quite busy first half of the day, so completely missed that. But yeah, learned a couple of things. It's a public holiday in the UK. If I was trading live, I probably would have definitely avoided entering any trades. But as I'm demo trading, felt like I wanted to enter, knowing in the back of my mind I'm not losing money, so not losing real money. So I just wanted to get a feel of the market to see what it did. And going forward, whilst I'm still demo trading, I am probably going to make more of these moves, slightly a little bit higher risk, just because I want to experience, the trade going against me on days that I know I shouldn't be trading, mainly because that helps me learn. Because in hindsight, if you're just marking up your charts, what you tend to do is you mark it and you see what price did, and then you move on to the next markup. So you're not actually, there's nothing significant happening for you to remember what happened during that day. So if you are entering trades, especially on demos, or if you are live trading, so one of the things that ICT says is, if you are live trading, that's great. But on days that you probably shouldn't be trading, take a demo trade. Get your feet in there and experience um, the movement of a market with an actual trade, so you can actually see the numbers and your percentages and the price, approaching your target or stop loss. So that's something that I'm doing, taking notes, just trying to create experience on certain days, on certain price action as much as I can, and this just helps me, mentally grow as part of coming closer to my live trading, whenever that may be. So thank you guys, thanks for tuning in. Hope you enjoyed that. Take care and speak to you guys soon.